And it's the midweek edition of the program. Welcome and thank you for joining us. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. We'll begin on the global scene as the World Bank expects global economy to grow by 4% in 2021, assuming an initial COVID-19 vaccine rollout becomes widespread throughout the year. The bank says, however, a recovery will likely be subdued unless policymakers move decisively to tame the pandemic and implement investment-enhancing reforms. The bank is also projecting that Nigeria's economy will witness a resumed growth at 1.1% in 2021, with activities expected to remain dampened by low oil prices, agreed OPEC quota, falling public investment due to weak government revenues, among other challenges. According to the World Bank president, and I quote, "While the global economy appears to have entered a subdued recovery, policymakers face formidable challenges in public health, debt management, budget policies, central banking and structural reforms as they try to ensure that this still fragile global recovery gains traction and sets a foundation for robust growth." He goes ahead to say, to overcome the impacts of the pandemic and counter the investment headwind, there needs to be a major push to improve business environments, increase labor and product market flexibility, and strengthen transparency and governance.
Absolutely. And on the global oil market, Brent prices rose this morning to the highest since February after Saudi Arabia agreed to make bigger cuts to the output than expected during a meeting with the allied producers. While industry data showed U.S. crude stockpiles fell last week, Brent crude rose as much as 0.6% to $53.94 a barrel, the highest since February 26, 2020. It was at $53.79 a barrel in early trade and gained 4.9% on Tuesday. U.S. West Texas Intermediate futures gained 13 cents to $50 a barrel, and the contract on Tuesday closed up 4.6% at $49.93 a barrel, its highest since February 24, 2020. And Saudi Arabia, the world's biggest oil exporter, agreed on Tuesday to make additional voluntary oil output cuts of 1 million barrels per day in February and March after a meeting with the Organization of Petroleum Exporting Countries and other major producers that form the group known as the OPEC+. The reductions agreed by Saudi Arabia were included in a deal to persuade other producers in the OPEC+ group to hold output steady. And
back here, electricity consumers in the country will begin to pay more for electricity following an adjustment in tariff by the Nigerian Electricity Regulatory Commission. NERC, in a circular to all the 11 distribution companies, says the multi-year tariff order took effect from January the 1st, 2021. Meanwhile, the federal government has refuted reports claiming an increase in electricity tariff by the National Electricity Regulatory Commission. All right, let's get the perspective of the DISCOs. A director at ECO DISCOs, Mr. George Etomi, joins us now on phone. Good morning, Mr. Etomi. Happy New Year to you.
Good morning, Chimez, and Happy New Year to you too.
Morning.
Now, you were on Sunrise this morning, and if I did hear you right, you were saying the adjustment the NERC has introduced in the tariff is guided by the law. I'm sure Nigerians would like to know if there would ever be a time they will get to pay less for electricity. Exactly. Or would it have to be upward review all the time?
Thank you for the interview. The direct answer to your question is, would there be a time that an adjustment could lead to a lower tariff? The answer is yes. And the reason is very simple. In the electricity industry, the multi-year tariff order is determined by a number of factors, i.e. the price of gas, the price of generation, the transmission, forex, and inflation. All these are put in a bucket by the regulator, and a tariff comes out. So whenever any factor affects any of these indices, positively, it could lead to the lowering of the tariff. If it is negative, it could lead to an increase in the tariff. Take, for example, gas. Gas comprises over 60% of the cost of electricity. gas is controlled largely by the federal government. So if an arrangement can be reached in which gas prices can become, let me say, less than what it is today, it will have a direct impact on electricity tariffs, positive in the sense that it would bring it down. But then let's be careful, because whether it's gas or generation, distribution, all these are propelled by investments from investors, either foreign investors or local investors. They must be guaranteed a return on their investment. And what will make it attractive for your gas fields to be developed, oil fields to be developed, generation to take place, distribution, is to allow for a system that allows a fair compensation between the cost of the product and the tariffs that is set. And it is the fine balance that the federal government, through the regulator, always tries to achieve. You don't want to scare away investors only because you want low tariffs. But at the same time, you don't want prohibitive tariffs, especially in a pandemic. So it's a fine balance that's going to be worked. But one thing I think we all agree to is that consumers are willing to pay for electricity provided they get it. So what is going on right now have been a series of discussions in which the market is being reset. And this discussion is taking place in the highest echelon amongst all the various stakeholders. And an alignment is being achieved in the entire Nigeria electricity supply industry. And this is leading to the events that you are seeing. The regulator is mandated by law to come up with this biannual tariff adjustment. They cannot work. They work through the laws. Now, whenever a tariff emerges from this adjustment, it can be negotiated, and those other factors we're talking about can come in. But they must, as a regulator, do what they should do. Otherwise, there will be no investor confidence in the industry. An industry that just works at the whims and caprices of anybody will never attract investment. So it is important that we have a regulator that's independent, that's firm, that's fair, so that it will promote investment. This is really what's going on. Now, to address the issue of
Mr. Tommy, I would beg to come in here now. I would beg to come in here. We really don't have much time. It's a very touchy issue there, and I'm sure we're going to have more time to dwell on it.
Exactly.
Ladi, well, cost-reflective tariff, everybody wants to pay low. Exactly. Cost-reflective tariff, of course, is the way to go, but how the government manages it now is what I don't know. That's the
question. So, yeah, so moving away from that, the Tony Elumelu Foundation has unveiled its 2021 entrepreneurship program to entrepreneurs across Africa. The application portal opened on January the 1st, and the chief executive of TAF, Ifeanyiwa Ugochukwu, joins us next. To stay with us.
We're being joined now by Ifeanyiwa Ugochukwu, the Chief Executive Officer at Tony Elumelu Foundation. Thank you very much, ma'am, for joining us on the program.
Thank you for joining us.
Thank you for having us.
And Happy New Year to you.
Happy New Year to you.
So the World Bank, of course, had estimated that the COVID-19 pandemic could actually, drive up to 40 million people into extreme poverty, in Africa. And, of course, erasing 5 years of prospects and progress made in fighting poverty. Now, how does this entrepreneurial program hope to change this narrative? I mean, given the situation we're into now.
It is very critical that we do not lose the gains that we've had over the last 10 years. As you know, the Tony Elumelu Foundation is 10 years, was 10 years last year. In 2015, 5 years into the foundation, our founder, Mr. Tony Elumelu, launched a $100 million commitment, very ambitious, to identify, train, fund, mentor 10,000 African entrepreneurs over 10 years across all 54 African countries. And this was primarily because he believed in the principle of Africapitalism, which is the principle that states that Africa's private sector is the engine house and the primary driver of economic development on the African continent. And of course, economic development is what we need to catalyze growth, poverty and eradicate poverty, as well as create jobs. And so we have put entrepreneurship on the global agenda. COVID-19 came, and it has almost decimated the African economies, targeting sectors like the tourism, restaurants, and these are sectors that are often manned by the small and medium enterprises. And so our Tony Elumelu Foundation Entrepreneurship Program opened its application January 1st because we intend on leading the charge for the economic recovery in the wake of the COVID-19 pandemic.
All right, I guess there's some kind of a technical issue there with your mic that needs to be corrected. In the meantime, while that is fixed, let's again look at what the World Bank is saying on the global economy, expecting the economy to grow by 4% in 2021. That's assuming an initial COVID-19 vaccine rollout becomes widespread throughout the year. The bank says, however, a recovery will likely be subdued unless policymakers move decisively to tame the pandemic and implement investment-enhancing reforms. Now, the bank is also projecting that Nigeria's economy will witness a resumed growth at 1.1% in 2021, with activities expected to remain dampened by low oil prices, agreed OPEC quota, falling public investment due to weak government revenues, among other challenges. Well, I guess, Ladi, you were trying to throw a question there.
Exactly. So youths make up about 60% of the unemployed in Africa. And according to the World Bank, this is the 7th year since the launch of this entrepreneurship program. What impact would you say this program has had in the job market as far as Africa is concerned?
As far as Africa is concerned, when we launched the program to train and fund 10,000 across Africa, our projection was that we would have a total of 1 million jobs created over the period through direct and indirect jobs. And we are very, very glad to see that results from the impact assessment report that we have just recently concluded with PwC and will be launching in Q1 this year shows that our entrepreneurs have beaten the statistics. We know that in Africa, 3 out of every 5 small startups fail in the first 2 years. But we've shown that on the reverse, 3 out of 5 startups that start with us are actually still in business. And these entrepreneurs are creating a minimum of 5 jobs. Some are known to have created over 300, 500 jobs. And so for us, the growth in terms of the job creation can be exponential. If we're seeing this impact with just over 9,000 entrepreneurs who in the last 7 years we've trained and funded, imagine what we will see when we train and fund 100,000 or even 1 million. And that is our projection, working with partners across the globe, because entrepreneurship is the only sustainable way for economic development on the African continent.
And talking about job creation there and entrepreneurship, now the issue about gender inequality, that's a global issue. So how do you factor all of these, bringing in women, into your program, empowering women more in all of this?
It's some studies that have been done in the last few years shows that in Africa, the access to finance gap between men and women is large. And so what we want to do at the Tony Elumelu Foundation is to prioritize the support that we give to women entrepreneurs. This we have demonstrated by our consistent increase in female participation from the beginning of the program. When we started the program, we had just about 26% female participation. As of last year, we had 41% female participation. And we intend to keep going till we get to 50-50. But most importantly, I think, is the partnership we have with the European Union by way of EU DevCo, where we entered a partnership with them for 20 million euros to identify, train and fund 2,400 additional women across all 54 African countries on our 2021 TEF entrepreneurship program. In addition to that, we will also be supporting the growth of existing female businesses within our alumni. And so we are committed to ensuring that the gender gap is bridged, that there's inclusivity, and that the old saying that goes, when you empower a woman, you empower a nation, is epitomized in the work that we do across the continent.
I beg to come in here again because this concerns women, and I'm very much interested in that. Now, while working with women, having identified all of this, what would you say are the major challenges, with women coming up when it comes to entrepreneurship?
You know, in Africa, women face unique challenges in comparison to their counterparts across the world. And that's because we've had a historical and cultural barrier to women in any type of formal, even land ownership, for instance. Most customary laws across Nigeria, it bars women from owning land. We found that studies have shown that women make up 90% of the workforce because in the SMEs and the micro businesses, it is women owned. Unfortunately, they are earning only 60% of the income and own a mere 10% of the property. And so what we want to see is to break down these barriers, to ensure that to ensure that all the enabling environment that women need to be supported to run their businesses, to grow their businesses, is put in place. Because we know that when a woman is empowered, it trickles down to her family, to her community. So if we're really looking to build up communities and to create economic growth, we must emphasize women-owned businesses.
Okay, well, understandably, but I'm also interested in the men.
Okay, go ahead.
So what do men expect to gain this time?
Well, so even though the partnership with the EU is focusing on women, of course, the program goes beyond that partnership. And so in 2020, we will still be selecting our 1,000 entrepreneurs who applied, but unfortunately, we did not proceed with the 2020 applications because it fell right in the middle of the lockdown.
Exactly.
And for that, we're not discriminating against the men. The men are very welcome.
Just saying.
Okay,
So for 2021, we can expect to train and fund well over 3,000, possibly up to 4,000, of which men will form. We will give you some. Don't
Fantastic,
worry.
fantastic.
Absolutely. And I'm happy you're not discriminating against the men.
Yes.
Anyway, hold your thoughts there. We'll take a quick break, and when we come back, we'll continue with this conversation because I know that this year's edition focuses more on SMEs.
Exactly.
So we'll be back in a moment.
And we've been speaking to the CEO of Tony Elumelu Foundation, Ifeanyiwa Ugochukwu. Yeah, so the postponement for 2020, most entrepreneurs that applied at that time, can new entrepreneurs actually apply for the 2021?
Absolutely. So in the 2020 applicants only need to revalidate their application by going into the system from February 1st, but we are accepting new applications in 2021. And all you need to do to apply is to go to www.tefconnect.com and fill in the application form, and you will get an automated response as to which segment of training you'll be accepted to, if you're accepted to training. And it is very interesting that for young people, we need to understand in Africa that our youth are our greatest assets. With Africa being the only continent in the world getting younger, Africa's positioning in the global framework is critical in terms of youth empowerment, entrepreneurship empowerment. We must prepare our youth for the world of tomorrow and not for the world of today. And that includes giving them an entrepreneurial mindset. Every young person in Africa must embody an entrepreneurship spirit in order to be execution-focused, resilient, and successful in whatever they do. And that is the premise behind the program. That is why we prioritize a world-class training that many have likened to a mini MBA, as well as mentoring. Also, mentoring, training, and funding are two sides of the same coin. Because a lot of programs, they train, but they don't fund. So you teach, and it's all theory. And so what we do at the Tony Elumelu Foundation is to ensure that once we have trained you and given you the skills and the tools to start and grow your businesses, we also give you that financial empowerment to be able to start that journey.
And how do you monitor, those that you have empowered to ensure that their businesses are really growing?
Monitoring and evaluation is a critical pillar in the work that we do. As I mentioned earlier in the program, we've just completed an impact assessment exercise with PricewaterhouseCoopers. And that is how seriously we take our monitoring and evaluation, because it's only in tracking our entrepreneurs that we can measure the number of jobs they've created, the revenue they're generating. And even for those who have not done well, we want to know what happened. Why didn't you do well? What do you need in your environment? What can your government do for you? What can private sector do for you in order to help you overcome those challenges and make a success of your business?
So what is your Yeah.
Yeah, you go. You.
Okay, so what is your outlook for the job market in 2021? I mean, we're going into new normal, and this year's program focuses on SMEs.
Always. Always. We are always focused on SMEs. We believe that SMEs are the lifeblood of Africa's economy, even in developed economies. SMEs produce 70% of the jobs in countries like Japan and Germany. In Africa, it's 90% of the jobs produced by SMEs. So if we are going to bridge if we're going to ensure that jobs are created and that we bridge that gap that we see between the number of people in the job market and the jobs available, we must empower SMEs. We must ensure that there are enough healthy small and medium enterprises in the African economy, because they are the job creators. And that is what we do at the Tony Elumelu Foundation. And we're calling on governments, calling on development organizations, and as well as private sector to focus on the SMEs, focus on giving them what they need to create success, which is funding, which is training, which is an enabling environment, policies.
So teaching them how to fish and giving them fish.
As opposed to giving them fish, absolutely. That is our mantra.
All right, thank you very much, Ifeinwa.
Thank you.
Thank you for joining us.
CEO, Tony Elumelu Foundation. We appreciate your time.
Thank you.
This morning.
Thank you.
All right, 2020 was truly an exceptional year in and outside of financial markets. The Nigerian economy has since reopened, and the ravaging impact of the twin shocks, the pandemic and the downturn in oil prices seem to have dissipated. However, analysts at Codros feel the cog in the wheels of economic activities will linger in 2021, but still puts forward ways that investors can position in the new normal. Opeyemi Ani, Senior Analyst Research and Strategy at Codros, joins us now. Thank you very much for joining us, and Happy New Year to you, Obe.
Thank you for having me. Happy New Year.
So a lot of Nigerians' fortunes are linked to the price of oil. What is your view on how the oil market will play out in 2021?
I think we can say the worst is over concerning oil prices, but the recovery, in our view, is quite fragile. Demand is expected to continue to recover as economies continue to reopen and as economic activity picks up across the globe. However, our view is that demand will not return to pre-pandemic levels, at least not before the end of 2021, especially as we're expecting that the vaccine rollout across the globe will be protracted. For example, we're saying that, the likes of sub-Saharan Africa is not expected to fully be vaccinated before 2023 at the least. So I mean, right now, the way it's looking is that traders and the market seem to be overly optimistic about this, vaccine rollout and the recovery and demand. And that is why we're seeing that oil prices are now trading at around $53 per barrel. Fundamentals are still very shaky in the market. We've seen that the pandemic is not over across Europe, having every day a record number of cases. So I mean, balancing the market, and I'm looking at OPEC here, is not going to be, a mean feat. It's great that we've seen OPEC Plus and the OPEC Plus coalition come together yesterday and agree that the production cuts will be maintained. They delayed the output increases that were supposed to be scheduled for next month, about 500,000 barrels per day. And we've seen that even Saudi Arabia has come to take on voluntary cuts on their own. So this has instilled more confidence in the market. But in our view, we feel that oil prices do not have significant upside from current levels, especially when you look at the significant spare capacity that OPEC members have in terms of production. We still look at the high inventory levels as well across the globe, and also the risk of shale producers coming back to the market once oil prices are sustained above $50. So overall, we are quite conservative and expect that Brent crude will average around $45 to $50 per barrel in 2021.
Okay. So, Opeyemi, what does this conservative view on oil prices mean for the overall economic growth in Nigeria?
So the first order impact really is around production and oil GDP. Oil production fell last year. This is Nigeria specifically. Oil production fell last year to the lowest level since 2016, 2017. This was, if you recall, 2016, 2017 was during the militant attacks in Nigeria. But last year, the levels of production levels dropped significantly as Nigeria made efforts to comply with the OPEC plus cuts. So, I mean, these are being carried into 2021, although there are plans for slight output increases, but, it's negligible for Nigeria. I think it's only about 22,000 barrels per day extra that we can pump out. So it's not significant, and overall, we're only expecting that oil GDP will only grow by about 0.7% next year. So the recovery in growth for Nigeria is really hinged on the non-oil sector. We expect that the service sector especially will drive this. The likes of telecoms have continued to grow every quarter over the last few years, and we expect that to play a huge role here in 2021. It is quite a resilient sector. We see that the telcos continue to expand significantly in terms of network infrastructure, and the subscriber base continues to grow. Patterns changed a lot because of COVID-19. We've seen a lot of technology adoption as a lot of people move from the office and the workplace to the house to work. So a lot of data traffic increases as well. So seeing as this seems to be a very resilient sector, we expect this to continue to drive economic growth in 2021.
Now, we've seen exchange rates being under immense pressure over the last year. Is there any respite in sight?
So it's a tough one for the monetary authorities and the CBN as well. Despite the two-step, or can I call it the three-step devaluation that we saw across the windows last year, official and the INE window, we still believe that the Naira is grossly overvalued at these levels. Our gloomy view in 2021 on the fundamental picture also leaves little to cheer going into this year. The current account deficit is expected to widen to about 4.1%, 4.1 to 4.3% of GDP in 2021. This alongside our expectations of subdued capital inflows, with the FX liquidity challenges still remaining, as well as the low fixed income yields compared to peers. This should leave the CBN really at the mercy of just the reserves to defend the Naira. So, I mean, that isn't enough for us. In our view, our baseline expectation is that the CBN will have to devalue again. We should see a depreciation at the official window to maybe around 400 Naira, which is around 5% devaluation. And then in the INE window, maybe to around 415 Naira to the dollar.
Okay, so what lessons should capital market investors take from 2020, and how should they be looking at 2021?
Yeah, 2020 was a huge test for investors, but I think it was how investors reacted that was very important. Though volatile, many investors did what you're taught as an analyst, buy the dip, and a lot of investors did buy the dip and enjoyed fantastic returns. It's tough, in years where there's crisis, a lot of people tend to make a lot of money. The crisis is abating in 2021. So we feel that investors have to go back to basics in 2021 and be more discerning in order to find the right investment opportunities.
Okay, you're talking about equities market. Now, I want to look at the fixed income market, and we saw, the yield environment in the fixed income market last year, and of course, continuing into 21, very unattractive. But then you would say it performed strongly, in 2020 for perhaps government and corporates. So What direction do you see yields going in 2021, and how should investors be positioning?
So for fixed income, I think it's going to be a tale of two halves for the fixed income market. There isn't much room left for fixed income yields to fall. So I think in the first half of the year, we should see that yields remain in the lower single-digit territory. And then, we should start to see a moderate uptrend to account for the reduced market participation as investors, seek yield and alpha in other asset classes. The latter parts of the year, a combination of that weak market participation, a revision in the monetary policy, where we see that monetary policy might revert to a tightening cycle once the economy goes back into growth, probably around the end of Q2. The widening fiscal deficit and the government's efforts to try to plug that and to fund that, as well as the fragile macro environment. So that should all culminate in yields moving upwards in the second half of the year. Consequently, I'm expecting average yields on bonds to trend upwards, maybe to around 7% levels, while the yields on NCV will go from the sub 1% levels to maybe around 1%.
Yeah, so talking about drivers now, will this movement be driven by the local or foreign investors?
Yeah, that's a great question. I mean, the locals don't really have much of a choice but to play in that market with the way liquidity is at the moment. And so it is likely that, we should see them continue to play there, but not, not as actively as in prior years. But on foreign investors, I mean, the low level of global interest rates should ordinarily have been a boon for Nigeria and for the Nigerian fixed income market. How monetary authorities in global markets have pushed a lot of liquidity into their economies, should have seen that a lot of flows should have been directed towards markets like ours with better interest rates. But those investors tend to look at countries that have strong macro fundamentals, good democratic standards, strong institutions. So, I mean, given that the current yield environment in the country relative to peers, the likes of Egypt, the likes of Kenya, Ghana, who have better interest rates than we do at the moment, policy flip-flops by our economic managers, and just a general lack of forward guidance from our economic managers were likely to be bypassed when it comes to attracting foreign flows. If you further contextualize this by looking at our expected or our view of expected capital repatriation that is going to happen in 2021 out of Nigeria because of our persisting FX liquidity issues, it just signals more market pressure in 2021.
Now, Obey, a very quick one before I let you go. Within the equities market, how should investors be positioning?
Yeah, I mean, the equities market, I think it's going to be a tale of two halves as well. For the equities markets, we should see an extension of the bull market in the H1. This is as, we should start seeing an earnings recovery, the elevated liquidity position, low interest rates, obviously attractive dividend yields as well. But we should start to see a reversal once FI yields start to go up. So in terms of how investors should be looking at, we think that, investors should look at stocks that are trading at low valuations, low valuations compared to historical levels anyway, stocks with attractive return on equity, probably above 20%, stocks with strong growth prospects. And there are some key sectors that we look at, like the telecom sector, which we expect, will continue to grow in 2021. It will remain quite a resilient sector. A catalyst for that sector as well is the PSB license and mobile money, which we're starting to see pick up. The likes of MTN are expecting approval in principles from the regulator. The cement sector as well is expected to continue to benefit from strong volume growth in that space. The banking sector and financial services as well, which have we think that dividend yields in that space are quite attractive. Yeah. Good.
Thank you very much, Obe. We do appreciate your time.
Thank you.
All right, talking about the equities market, of course, we saw some kind of reversal yesterday. It looked like the bear decided to rear its head. But let's talk to Afolabi Benro, Stanbic IBTC stockbrokers there. Good morning, Benro. Thank you for joining us on the program. Yes,
thank you for having
the
me.
first profit taking for the year seems to have come too soon. Was it expected? Is this just profit taking or market correction?
Yes, I think it was expected. The market is still generally quiet. Most of the investors are still on the sidelines. A couple of them are still on holiday. So we expected that the market will sort of be trading either flat or maybe bearish because we're not seeing any sort of aggressive buyers coming into the market yet. So we expect that things will definitely pick up, maybe from next week, third week in January. We expect activities to start to pick up a little bit.
All right, now a quick one. Bua Cement this week announced successful conclusion of its 115 billion Series 1 fixed-rate senior unsecured bond issue. That's under its maiden 200 billion Naira bond issuance program. How much of impact did that have on investor sentiment towards that stock? Because we saw that stock dropping yesterday.
Yes, I mean, Bua Cement dropped yesterday. But generally, like I said, it's still very quiet in the markets. A lot of investors are still on the sidelines. So it's expected that, the sellers will probably be more than the buyers now. And then sellers would have to hit the market down in order to sell what they want to sell. Like I said, we expect activities to sort of pick up, maybe from next week, going into the third week of January.
Okay.
Thank you.
So we take another quick break, and when we come back, we do an open call to London. Do stay with us. And now for updates from the streets of London, let's talk to Juliana. Hello, Juliana. Good to see you, Juliana.
Hi, Laddie. Good morning.
Good morning.
Nice to see you.
Nice to see you. So let's talk sales data. UK car sales have fallen to its lowest level since 1992. Are you looking to buy a car this year, maybe to help bolster sales?
No, I won't be buying a car this year, Laddie, because unfortunately there's nowhere to go in London because we're in a lockdown.
Exactly.
And according to this data released by the Society of Manufacturers, they're not surprised at this data too, seeing that they've had a slump by 30% last year. And there have been so many issues that have caused problems for the manufacturing car industry in the UK. One of them, of course, was the COVID-19 shutdown. Then the government's ambitious plans to ban petrol or diesel cars within 10 years to make all cars here in the UK electric. And, of course, Brexit uncertainty towards the end of the year really hampered their sales. So this 30% drop, not only is it the biggest fall since 1992, apparently it's one of the biggest slumps that they've seen since the end of the Second World War. Now, they had projected that in 2021, car sales would go up to 2 million sales, which they were eyeing in 2020. But again, because of this new national lockdown, which some experts predict will last with us until April, they have downshot those projections once again. So now what a lot of industry insiders are calling for is the government to invest more in electric cars, electric vehicles, if the government are indeed going to stick to those plans of 2030 being the year where Britain turns electric. There are some statistics about electric car sales vehicles last year. year. 6.6% of this 1.63 million cars sold last year were battery electric vehicles. 1 in 10 were plug-in vehicles and 4.1% were hybrids. So there are some lucky few with a bit of change in their back pocket that have decided to invest in electric car vehicles. But the Society of Motor and Manufacturers don't believe that the government are doing enough to help this process along.
So rail services in Britain are likely to be slashed by about 50% in the coming weeks, and airlines are looking to cut schedules. What's the latest on that?
Well, this has come to no surprise. Really, the rail lines in this country have been nationalised due to the COVID-19 pandemic, and that's because rail passenger numbers completely fell. I think before the pandemic, rail passengers were about 7 million a day. That has been completely reduced to about 4%. Just 4% is what the usage was. And because of that, and because of the lack of revenue that rail lines were receiving by commuters, the government stepped in. And I believe last year they spent about £9 billion subsidising the railways. They, of course, don't want to do that again this year. So they are going to be speaking to some of these railway operators to try and look at how they can reduce their services. They're also going to be speaking to the Mayor of London, Sadiq Khan, about reducing tube lines. Now, that's going to be a little bit controversial because even though we are in a lockdown, people are still going to work, especially the people who work in construction. And it is very, very packed on the tubes. Any of our viewers in London who are still using them can attest to that. But Sadiq Khan says that tubes at the moment are 18% at pre-pandemic levels and 30% at pre-pandemic levels on the bus. So they do want to try and consult to try and find some way that they can reduce them whilst keeping people safe. OK, so let's talk fashion. I know you're a fashionable person. Jimmy's a fashionable person. Yeah, so Marks & Spencer is finalizing a deal to buy the fashion brand Jaeger. What's the update on that? Interesting story. Marks & Spencer's have actually been linked to Jaeger since they fell into administration in November. It's the same story that we've been seeing amongst a swathe of big stalwart retailers because of the pandemic and the fact that it's just been very difficult for them to keep up with the new kind of fast fashion online stores. So they did fall into administration. Marks & Spencer are keen to put their name on that brand. They won't be taking over their standalone stores. I believe they had about 30 across the UK, but they do want to take their stock and the brand name. And now Marks & Spencer's, they did try and get Victoria's Secrets last year, but they were nipped to the post by Next. Next managed to get Victoria's Secret. So they're hoping that they can get the Jaeger brand. That will be a good news story for Jaeger as supporters and fans and lovers. They've been around since 1880, if you can believe that. But again, you know, they struggled during the pandemic. So Marks & Spencer's are hoping that they will be able to secure that bid, although we don't know anything about how much it's going to cost or whether their shareholders are happy. But yes, Sky News are reporting that story.
Thank you so much, Juliana. Thank you for your time.
Thank you.
If I don't have money to buy a car, then I can spend my money at least being fashionable.
Exactly.
What I can afford anyway.
Exactly.
All right, let's look at the debt and currency market here. Trading in the Nigerian Treasury bills was mixed with a bearish tilt as the average yield expanded slightly by 1 basis point to 0.5%. All right, let's bring in Ladi Bello, fixed income dealer with Access Bank, to tell us more. Good morning, Ladi, and Happy New Year to you.
Good morning. Happy New Year. Thank you for having me.
Now, it's been 2 trading sessions since the new year. How would you describe the market where you play so far in the year?
Okay, we've seen a positive outlook for the year in terms of how the 2 trading sessions started off this new year. We've seen bullish sentiments across both the Treasury bills and the bonds markets. We've seen most of the activity skewed towards the short end of the curve, both on the T-bills and the bond space. And simply because market participants are looking for the next best instruments to deploy their funds at the shortest duration possible. coupled with this, we've seen high system liquidity, which has boosted the demand for treasury bills within the markets. We've seen demand for bills significantly grow day on day by an average of about 25%. We've seen a large number of interest skewed towards the short and medium tenured bills, although we've seen not that much interest on the long end of the curve, especially on the bonds, the 49s and the 50s, which are hovering around slightly above the 8% handle. So in terms of activity, the activity has picked up coming from where we left off last year, and we expect the bullish sentiments to continue going forward into the week, simply because of the high levels of liquidity in the system. Within the bond space, we've seen most of the interest also skewed towards the short end of the curve, the 22s, all the way down to around the 2027 instruments as well. Consequently, yields across board have declined steady by an average of 10 to 12 basis points across both markets.
Now, the yield environment in the fixed income market has actually been unattractive. Now, do you expect that to change anytime soon?
Well, there's a disparity in rates between the Nigerian Treasury bills, which is offered by the Debt Management Office, and the OMO bills, which are offered generally by the Central Bank of Nigeria. Both bills are backed by the full faith and credit of the federal government. But nevertheless, we'll still continue to see the interest rate environment, especially on the NTB side, on the lower band, simply because it's based on forces of demand and supply. So where we've seen interest would be the OMO bills, which are providing relatively more attractive yields because the central bank is trying to keep offshore investors within our economy happy, managing the rates at a certain level so that they can keep bringing in fresh funds into the system. So generally speaking, yields may not be attractive on the NTB side, but there'll still continue to be some play on the OMO bills, especially on the short end of the curve, as counterparties can continue to reinvest their funds up until they see slightly more attractive yields, whether within the bond space or whether it's within the NTB space of the curve. So generally, last year we closed the year on a low interest rate environment, and we've seen a gradual increment in yield, which we hope to continue to see into the next phase that we're going to, which is the new quarter. So what we expect to see is a continuous or gradual increment in yields generally, so that it can spur some sort of activity in the markets. As you may well know, the activity before we closed last year was a bit tempered.
All right. We hope for a profitable trading for investors in that market in particular. Thank you very much, Ladi Bello, for your time. All right, Ladi. I guess it's time for us to get out of this place.
So we had Ladi Bello today, so I'm
have
expecting Chimezie tomorrow.
It's okay. Let's see if that happens. My name is very unique, mind you.
Exactly.
All right, that's it on the program. Thank you for watching. I'm Chimezie Obi Iwago.
And I'm Ladi Williams. Thanks for watching.